Well, hello, you trader nerds. Welcome into a terrific Tuesday. Good to see everybody here. Real traders never trade alone. They trade with their fellow nerds. We got Don in the house today. We got Drew. We got Jim. We got Mo. We got Ricardo. We got Sam. We got Stacy. We got Vicky with an I. We got Vicky with a Y. And we got Bo today. Welcome, everybody. Good to have you with us. And looks like we have an update. About 0.75%, up 44.25 on the ES. That is amazing. And here's the overnight high. So we blew out the overnight highs. We're above VWAP. We're above the cash open. And volume looks really low. Doesn't it look low? Doesn't that look low to y'all? It's hard to find since I don't have my average line anymore. VIX is up, though. Look at this. Well, not necessarily up from, it may be down a little bit, but it's still elevated from what it was yesterday, I believe, 21.37. And the AD, the advancers over the decliners are 164. And it has been a steady march upward in the market. And now we get to lunchtime chop. So here was the opening 15-minute range. We're above that. So we're just kind of hanging out. Let's look at the big green monster. Isn't it amazing how the big green monster works as support and resistance? And this is support. Look at this. Just beautiful. You would have thought that I drew this yesterday and drawing support. No. This was drawn 7 or 8 days ago. Isn't that amazing? So the 80% line stands as support. We are at the point of control and we are fairly priced. Let's look at the NQ and see what NQ looks like. Not new. Let's see. NQ looks like it is overbought. Looks like the NQ is overbought a little bit. And we would anticipate maybe a drop back into this area, but we can hang out here for several days. Now look at the linear regression. It's amazing, y'all. We're going to get a good size move and it's coming. And I'll tell you why you can tell it. You see, this is a really prolonged period. Normally these consolidation periods are kind of short. This one was kind of long, but we're getting into the tooth now with a long consolidation area. I may even have to move these out if we don't poke our heads above or below it. So the market is just kind of treading water, not going up, not going down. It's just treading. And the longer that we tread in between these two little lines here, the bigger the move is going to be. Now, is the move going to be up and be in the general direction of the overall trend, or will it be down back to the bottom side of the thing? It's hard to tell. Hard to really tell. But if I had my guesses, I'm saying it's probably going to be a move to the upside to keep bouncing up above here. But we just haven't seen it yet. Consolidation. All right. So let's look. I think I might have a little bit of a hedge problem today. So we'll take care of it. So let's see what our positions are. Let's go to cap requirement. And let's look and see what we have here. Let's go over here. Now, one thing that I can tell you by the last couple of back testing days that I've had is TMF is not inversely related to TQQQ. It's not inversely related to the market. It basically has no relation to the market. It really is not related at all. So what we're going to do is we're going to only look at our hedge for ES and TQQQ. That's all we want to look at, ES and TQQQ. And so let's get the report up there. And so now let's go to risk analysis. And we're going to go 40% up and 20% down. Let's make sure everything is here. This shows a 85% move down in that. And that should say 60 when it's beta weighted, but it doesn't. It says 20% move. So if we go uncorrelated, it shows 20% move on TQQQ, but that should really be around 60. So let's go to none and do 85. So really our hedge, y'all, is kind of not a hedge down here. Now with this, now if we take TQQQ out, let's see what that looks like. TQQQ out, we do have $5,900 worth of a hedge, but if you put TQQQ in there, now it would be neat to see if we can change this, and I think we can. So this would be more like 60% down. There we go. There we go. So now we've got 36, 48, 60. So my hedge is basically, I'm hedged to the downside. If we were to get a big, humongous move to the downside, 20%, this would go down roughly 60%. Now, I know there's some purists out there saying, well, technically, Bobby, it's not going to be 60%. It's going to be 58.7, whatever. I'm approximating what we think that TQQ would be down if we're going to be down 20% in the market with VIX up 40 points. So we're really just kind of break even hedge. It would be nicer to have a stronger hedge here. So let's see what we got in our working orders. Let's see how those are looking. So let's go over here and let's go to activity. And we do have a couple of workings. That's the only working orders I've got, 455. Hold on a second. Let me make sure I'm showing the right stuff here. Let's make sure we're in the right account. Bobby account there. Yeah, it's just that one. Where's field? Let's see. Field orders. Day orders, TMF, TQQ bill, all of those were filled. So this was filled at 80%. So we've only got 2 working orders. That's amazing. Let's go here. Yeah. Let's change this just to make sure. There's where I thought we had a lot more working orders. Not sure why it didn't show up. So we've got 310 down to 20. That's a long way away. We've got 290 down to 155. That's a long way away. 315 to 20 is a long way. 295 to 155. So we really don't have anything that's close here. So what I think I'll do is I'll probably wait a day or two because I do have a sufficient hedge. In other words, I don't want to blow out my account with my TQQ going down if we had a dramatic drop, and I won't be, because you'll see without the TQQ shares, we've still got a hedge that hedges that move down, but we would be down $200 and something. So we can handle that. So does everybody kind of see how that works? Now, I've been playing with Claude some more, basically to refine the strategy. And I'm going to tell you, everything that I did basically proved that the method that we have right now is the ultimate method. Now, you could get a little better risk-adjusted returns, but it's not as good. Let's see if we can go to Claude and say, Claude, let's see, let's go here. Claude, show me the results of the back test of my original optimized strategy. How do you spell strategy? Strategy, including beginning balance, ending balance, CAGR per year, and max drawdown per year, and include the final Sharpe ratio for those of y'all that like Sharpe ratios. So let's see how this is here. And just show what Claude says. Certainly, I'll create a comprehensive strategy of your ultimate optimized strategies backtest results, including the metrics you've requested. Let's process the data and present it in a clear tabular format. We like clear tabular formats. So let's see what it comes up with here. And it's amazing that it does all this stuff. It's really neat. So let's see. Come here. All right, let's see. Odds or predictions. What is that? That's not right. Let's see. No, that's not what we're talking about. Optional analysis, chat strategy analysis, pasted content. What is it? Maximum drawdown. Why is it not doing that? Hold on a second. It's going back to old stuff here. Look at there. Isn't that cool? Shows a little different than what I came in as 28 million. I'm not sure why it's a little changed, but this should have been around 28 million instead of 34 million. But still, let's look at it. The average return here, and I'll have to double check their math because it looks a little different than what I did. But 112%, 85%, 79%, 89%, 71, 5%. So 2015 didn't look like too good of a year, but it's up 5%. 2016 up 11%, but then you get a 79%, a 14%, a 67%, 76%, 32%. 2022 was really the big problem. You had a 41% down, and the maximum drawdown that particular year was 36%. In 2023, you were up 141%, and it says it's up 15% this year. Maximum drawdown 15%. And let's see, overall Sharpe ratio was 1.10. The strategy shows significant growth from 2010. It should be about 28 million according to my calculations. Let's see, consistent positive returns. Only 1 year, 2022, showed a negative. High returns. Many years show exceptionally high returns, with 8 of the 15 years having a return of over 50%. The annual max drawdowns range from -8 to 40%. Recovery ability. The strategy demonstrated strong recovery ability, bouncing back from its worst year, 2022, to its best year, 2023. Sharpe ratio suggests that the strategy provided returns above the risk-free rate, considering its volatility, and it highlights the strategy's potential for high returns, but also underscores its significant volatility and risk. And I want to make sure that I make this really clear to y'all. If you are doing this strategy alongside of me, make sure that this is not the baby's money. This is not the baby's milk money, right? The diaper money, the food money, the grocery money. This is money that you have an ability to say, hey, I'm putting money at risk to try to get outsized returns, because there's no indication that past performance will guarantee future results. And the use of leveraged ETFs involves substantial risk. It's crucial to consider these factors when evaluating the strategy's potential future performance. But at the same time, the thing does really good. And let me show you. Let's see what the here. If you had started with $100,000 just in TQQQ, right? Here's a TQQQ. It had been $100,000. At the end, you would have had $6.8 million. Y'all, that's pretty strong, right? That's just if you held 100% TQQQ. But with our strategy is a little stronger, y'all. Our strategy, you ended up with $28 million. So those are pie in the sky numbers, but you know what? I got 15 years. I can let it ride. Let's see if we can take our $75,000 up to maybe 20 million or so. All right. Anyone got any questions? Anyone got any comments? Everybody good? Does everybody have everything that you need if you're running the strategy? You need the strategy plan here that tells you how to do it. And you also need the prompt so that each month you're able to go into Claude and say, hey, Claude, give me the amount that I should be putting in one or the other. Now, some variations too, y'all. I tried SQQQ as well. I did an SQQ back test. I said, what if you did TQQQ with SQQQ, which is the inverse of TQQQ? I said it'd be, totally opposite. And you just went and did like 62% for TQQQ, and you did 37% to SQQQ. How would that work? And that worked out really good too, but not nearly as good as TMF. Look at this. It went up to a back test of $7.1 million. So a little bit better than just holding 100% TQQQ, but TMF was clearly a winner. Now you can try other things. You could try. We tried Bill. Bill did not do as well as TMF. We could try gold. You could try silver. You could try crude oil. You could try something as your second asset to put it into. But really, this just keeps coming out time and time again, the split between TQQQ and TMF. So basically, you get an adjustment that's based on the VIX, right? So it gives you a VIX adjustment. If VIX is 17 and this is above and this is below these moving averages that we use, it'll tell you what the trend adjustment is. So if one's above and one's below, but I also had it to back test what if one of these is above and one of these is below to make a change to it? And our strategy that we've already developed just kept being the optimal strategy. It really did. So I think we're in a really good position. Now, here's the question that I've got for you. And this is the question I've got for me too. Am I going to be able to sit through a 40% drawdown? Am I going to be able to sit through a 50% drawdown? And I think that I can, knowing that the strategy over the long run, as long as TQQQ continues to run, and that means we believe NVIDIA and Apple and Amazon and Meta and Google and Microsoft and all of those companies are going to continue to outperform. Do we think that they're going to outperform? I certainly do. I think we are at the beginning of a technological revolution with this AI. I think it's a big time, and I think those stocks are going to do phenomenal over the next 10 to 15 years. I think technology is going to be the place to be. Now, I could be wrong, but I'm willing to at least gamble $75,000 to see a full ride. All right, guys, love you to pieces. Thank y'all for joining me today, and I will see everybody tomorrow.